Welcome to Investor Snackers. It's great to connect with you all again. Today we dive into something exciting, our streaming subscriptions and binge-watching habits. Welcome to the Streaming Showdown. We'll guide you through the latest numbers, wins and surprises from the streaming giants. Today, we analyze latest earnings from the Big Three: Netflix, the pioneer, Disney+, the House of Magic, and Amazon Prime Video, the everything store. It's time to peek behind the curtain. Are they hitting their goals? Are viewers still flocking to their platform? Grab your popcorn and settle in. We'll look at revenue, subscribers, profits, and future trends. The streaming world is a high-stakes game. Let's see who's leading, who's making moves, and who's feeling the heat. Ready? Let's do this. All right, first up, let's talk about the OG, the one that arguably changed the game forever, Netflix. They dropped their Q1 2025 earnings report on April 17th. The big headline? Revenue hit a whopping $10.54 billion. Analysts expected $10.5 billion, so Netflix just casually strolled in and said, "Oh, you thought that was good? Here's a little extra." That's what we call a mic drop moment in the financial world, folks. It's a testament to their continued ability to draw us in and keep us subscribed, even with all the competition out there. And it wasn't just the top-line revenue that had people buzzing. Their operating income, which is basically the profit they make from their core business, came in at $3.3 billion. The forecast? A cool $3 billion. So, again, Netflix is out here exceeding expectations, showing that they're not just making money, they're making more money than anticipated. Then there's the earnings per share, or EPS, which landed at $6.61. Now, for those of us who aren't Wall Street wizards, this number was significantly above the estimated $5.68. It's like getting an A+ when you're hoping for an A. That's a big win. So, what's the secret sauce here? Well, the analysts, the smart folks who dig into these numbers, pointing to a couple of key things. Firstly, increased subscription revenues. That means more of us are signing up or sticking around, and maybe even opting for those slightly pricier plans. And secondly, the advertising revenue is starting to become a real player. Remember when ads on Netflix seemed like a wild idea? Well, it looks like it's paying off. Plus, they mentioned something about favorable timing of expenses, which sounds a bit like finding a $20 bill in an old coat pocket. Always a nice surprise for the bottom line. Now, here's where things get a little mysterious, a little intriguing. Netflix decided not to release its subscriber data this quarter. Yeah, you heard that right. It's like your favorite character suddenly going silent. For years, that subscriber number was the holy grail, the metric everyone obsessed over. Their reasoning is that they want the focus to be on revenue and profitability, which, to be fair, are looking pretty fantastic. But it definitely has us all wondering just how many millions are tuned in. It's a bold move, and only time will tell how Wall Street and the industry continue to react to this shift in reporting. Despite playing coy with the subscriber numbers, Netflix did reaffirm its 2025 revenue guidance, projecting a solid $43.5 to $44.5 billion for the full year. That's a big number, showing a lot of confidence. And for the next quarter, Q2, they're projecting revenue of $11.04 billion, which is, you guessed it, above what the market was expecting. So the story for Netflix in Q1 2025 is one of strength, profitability, and a little bit of "we're doing things our way now." They're clearly still a massive force to be reckoned with, flexing their financial muscles and keeping everyone on their toes. All right, next up, let's journey into the enchanted forest of streaming with Disney+. Disney announced their Q1 fiscal 2025 earnings, showing a 5% revenue increase to $24.7 billion. The streaming segment, including Disney+, Hulu, and ESPN+, saw a 9% revenue increase, reaching $6 billion. The big news? The streaming segment turned profitable with an operating income of $293 million. Disney+ saw a slight dip in subscribers, down 1% to 124.6 million. Overall, Disney's streaming profitability marks a major milestone, balancing growth with financial success. And finally, Amazon Prime Video, the quiet giant dominating the living room. Amazon Prime Video is a colossal force, quietly dominating the streaming market. With 167 million subscribers and a 22% US market share, it surpasses Netflix. Their ad-supported tier reaches 130 million monthly users, driving significant revenue. Amazon's integration with Prime membership makes it an unstoppable powerhouse. Woo! Okay, folks, that was a lot of numbers, a lot of insights, but hopefully a lot of good information as we try to figure out this ever-evolving streaming landscape. So, to sum up the streaming wars as they stand after the first quarter of 2025, Netflix absolutely crushed it, bringing in a staggering $10.54 billion in revenue, showing a very healthy 12.5% year-over-year growth and beating all those analyst expectations. They played it a bit mysterious by not offering a subscriber count, but their financial health looking incredibly strong. They're clearly focused on that bottom line, and it's paying off. Then we have Disney Plus, which had a truly landmark quarter. They saw a solid 9% revenue bump in their streaming segment to $6 billion. And the big news, they finally achieved profitability in streaming with $293 million in operating income. That's huge. Yes, their core Disney Plus subscriber numbers dipped just a tiny bit, but the overall strategy seems to be working, proving they can make this streaming dream a financially viable one. It's a testament to the power of their content and to some smart, but sometimes tough business decisions. And finally, Amazon Prime Video continues to be this quiet titan. Their subscription services revenue, which includes Prime Video, hit an enormous $11.72 billion. Up 9% year over year. With approximately 167 million subscribers globally, thanks to that Prime bundle, and leading the US streaming market with a 22% share, they are a formidable force. They even captured the biggest slice of new subscribers this quarter. So who's truly winning the streaming game? Well, it looks like each of these giants found their own way to claim victory in the first quarter. What do you think? Hit that subscribe button for our full breakdown and more insights as this incredible story continues to unfold. Thanks for tuning in.